welcome to the Market Meditations podcast. Today we're joined by John Milne, one of my best friends, and a chief medical officer for me at Zoic Capital, and more importantly, an ER doc, helping lots of people. And he happens to be in charge of the second largest or the largest real estate healthcare portfolio in the country, working for Providence. And we thought we would get a little state-of-the-art update on COVID-19 and how it's affecting the hospitals, and just kind of get John's take as an ER doc and administrator and part human as well.
Wow, that's quite an introduction there, Neil. Part human.
Yeah. And it's probably still insufficient, John, but
well, I don't know about that. I appreciate it.
Yeah.
So I guess what do you want to know about COVID? I mean, there's so many pathways. There's so much to talk about. I mean, we could spend the next 2 or 3 hours chatting about COVID if you wanted to.
No.
First, well, John, what is your assessment of the caseload you see coming through? Is it still increasing, and if so, is it geometric or exponential? Is it leveling off in any sense? What do you feel right now?
It's interesting. You used the word "feel" right there. So this is the classic scenario where sometimes the emotional perception of what's going on around you doesn't always align with the data, and so across the country we're struggling with not having enough protective equipment and masks to really meet the theoretical demand that's out there. And there's just a lot of anxiety among healthcare workers that, as we look at the experience in Italy, the hugest the largest section of the population that's getting infected are healthcare workers in many cases. And so every day, as I talk to my colleagues, there's a level of fear and anxiety as people go to work and are nervous about, am I going to get myself infected? Am I putting my family at risk that's doing that? And am I taking all of the necessary precautions? Because there's so much we still don't really know about this virus and how it's behaving and all of the potential risk factors. We're learning a lot as we go, and we're learning it on the fly, but it still is at times something where we just don't necessarily have all of the picture. And so for healthcare workers, that certainly is the feeling of it is very different. And then sometimes also the sense of like, okay, are we being overwhelmed by this? But as we look at the data that's there here in the Seattle market where I'm at, which was really kind of the epicenter to a certain degree of COVID, at least for the United States, the first known case of COVID to be hospitalized was at Providence Everett, which is one of the hospitals in my system where I work. I don't practice there personally, but it was the first known patient in the United States was taken care of there. And then several hospitals here in the overall Seattle area had the first really high spike in census for the disease process. And what we've seen here over the last couple of weeks as we track the data is it's been rising, but the growth rate has actually started to level off. And it's not been as dramatic here in the last week or so as we would have predicted and the models had originally predicted. And that's probably in some ways due to the early signs, or at least we're hoping, of some of the social distancing and other fairly aggressive techniques that have gone into place. In contrast, New York is really just exploded here in the last week or so in terms of the number of cases, and certainly has passed Washington as an epicenter for it. I was actually on a conference call last night with some of my colleagues from New York and listening to them to kind of describe the challenges they're facing in terms of trying to balance resources. They're not completely overwhelmed or underwater yet in terms of the process that what they're looking at, but as the projections are looking at it from where the peak is, there's still a ways to go. And there's actually, if you want to look at it, there's a some good website that has some fairly good predictive models on it, pretty easy to use. It's put out by the University of Washington. That's out. That's open to the public to be able to do that. That I'd recommend people check out if they're interested.
We will add it to the show notes for sure.
Yeah.
John, you're describing a little bit about Washington and New York. I'm kind of curious, we're obviously reading a lot, but you're on the front lines and, lots of ER docs across the country. Does it seem to be growing other places beyond New York that are notable to you?
So I think the entire Northeast in the United States is certainly growing rapidly, and I think that given the population density that we have in the Northeast, is going to certainly be I think an area that is exploding and is going to kind of continue to grow at a fairly robust pace. As we look at the rest of the West Coast, we're seeing steady growth in the hospitals that we have in the Los Angeles, Orange County markets. There into Southern California is growing, but the projections there, similar to Seattle and Portland as well, are not as rapid as we might have expected a couple of weeks ago. And San Francisco is in that kind of same boat where they've got hotspots. Certainly they're there. There are definitely continue. We're still on the upward cycle of the growth curve, but there's a certain level of optimism at this point that the growth curves may not be quite as steep along the West Coast as we might have predicted.
Well, and isn't one of the issues in still predicting the entire model is that we're having an issue getting testing?
Oh, absolutely. Yeah, testing is still a huge challenge in terms of having accurate data. And I think that's going to be for all of us in terms of the overall spike with this is because we haven't been able to as aggressively test as they had in China, for example, and the public health system is not doesn't have all of the same social tools in its toolkit that they have available to them in China. The concern is we're going to ultimately not have a clear sense of who are the non-symptomatic carriers of the disease or people who have minimal symptoms and are not able to appropriately quarantine or isolate those individuals from the population. And so because of that, you end up with potentially kind of a bimodal spike in the curve that's going on here, because we'll see what we're all worried about a little bit here is that we'll get through the first wave of this and everybody kind of starts seeing the downhill decline of the virus, and then we kind of relax a lot of the social isolation procedures that are in place, and without having done good widespread testing to understand who has the disease, who isn't, who maybe has become immune to it and developed antibodies against it, we're going to potentially see then a second, perhaps wider, larger spike come in a few more months, and that so you may see a dip in the disease process into the summer, and then have it rear up again, late fall sort of a time frame, and have a second even bigger wave.
This makes me wonder quite a bit, right? Just in terms of travel warning and all of that. Like, I'm thinking about not traveling really too much until September, or maybe not at all. I'm kind of curious whether you think that's advisable, or we don't have enough data yet, or how is it you look at that? Your daughter is in London. If she says, "Shall I hop on a plane to come see you at the end of August?" Are you going to tell her no?
I think we don't know enough yet about what that looks like. I think that what we're going to need to do is adjust overall as a society to what the new normal looks like. What is the prevalence of this virus that's out there, given, and what is the overall infection rate that is happening, and what are the underlying consequences with it as we learn more about the overall pathology and epidemiology behind what this looks like. I think it's going to be interesting to determine how we as a society adjust to it. And so I guess we're long way of saying I don't know what your travel is going to look like in August, September yet, because we just don't know how this thing is
So
behaving.
at this moment, if your daughter says, "Can I book a ticket at the end of August?" what are you saying to her?
We flew her home a week or so ago just to get her out of London before things really started to kind of erupt in London the way they have. So she's back here in the United States now. So I was obviously not worried about putting her on a plane there. She's young, healthy. I'm not overly worried about her, especially if she's taking reasonable precautions from that perspective. And I think that's where do we end up as a society having just more overall universal precautions against infectious diseases, the way you see people in Asia are wearing face masks as a much more routine sort of part of their lives than that's a more of a cultural norm than it is here in the United States. I'm wondering if we begin to adopt some of those sorts of practices on a more routine sort of a basis as people learn to live with the risks associated with contracting a virus like this.
Yeah. And, John, you talked about the pathology of the disease. What are you seeing? And is it similar in any way to previous outbreaks you've dealt with, like other H1N1 type viruses or anything that we might have had in recent memory?
Yeah, so H1N1 is influenza, and
Mm-hmm.
influenza is a completely different family of viruses, and
Mm-hmm.
the pathology of what you're seeing in terms of what it does to the lungs and how it behaves in the body actually has a fairly distinctive and different clinical picture to it. So this is a virus that seems to be creating a much more robust infiltrative type pneumonia picture when we look at it on CT scan or on X-ray, and has a much broader level of multi-organ failure for those individuals who are susceptible to it. The numbers of patients who, when they get sick, get really sick with it, the death rate with it, and the problem with it, with quoting any kind of mortality statistics at this point is we don't, because we aren't testing widespread, we don't have a really good
Right.
denominator in terms of
Correct.
being able to say what the rates are, but it's looking like this is potentially a more lethal virus than what we would have had with influenza. So if we think back, this is a coronavirus, so that is in the same class as the SARS or the MERS outbreaks that were a decade or so ago. And so those types of viruses did not spread quite as much as this one is. And so what is the infection rates, I guess, and transmission patterns seem to be somewhat different in comparison to those. But in terms of the clinical picture of how the impact of those viruses, because those are both coronaviruses, so the same virus family as this one is causing potentially higher death rates.
Mm-hmm. Mm-hmm. Yeah, thank you. We're all searching for inferences, and people have reached back to the Spanish flu pandemic, of course, notably for the economic dislocation as well as the lives lost. And of course, that came in three waves before it sort of petered out. That was, as you mentioned, an H1N1 or influenza type of virus. The SARS and MERS, do they exhibit the same pattern?
The SARS and MERS, are to coronaviruses, so it's the same virus family as this one. So we're anticipating we will see, hopefully, at least a similar analog to what that looks like. But it's still just too early to know.
Yeah, yeah. With Spanish flu, of course, the second wave was the most deadly.
Yeah, for sure.
Yeah, and it came back, I guess, in a more virulent strain, is what I understand from my study of it. It seemed to have mutated rather quickly.
Yeah, and that is the challenge with these. So these viruses, or the coronavirus, is what we refer to as an RNA virus, and so it just kind of refers to the type of genetic material that it's using in terms of its transmission. And the challenge with RNA viruses is they tend to mutate faster than other types of viruses. So I think that's part of what really worries us about this type of a virus, is that the overall potential for it to, and there's at least 2 different strains that we're aware of right now from the testing based on the population in China. It appears that is that there's like a second more virulent strain that's mixed in with this. So still more to know as far as what the prevalence of those 2 strains look like, and there may be more at this point that are out there.
Hey, I'm curious. Obviously, everybody at this point is familiar with social distancing, the stay-at-home orders. I don't know. There's probably masks. Having more zinc because there seems to be a run on them, on zinc on Amazon.
There's a run on lots of things.
Washing hands. John, what other things? You're in the front line of this, right? On the few times you get a chance to work a clinical shift or have to work a clinical shift now. What other things can we do to protect ourselves?
So I think it's important to recognize what this virus is in terms of how it's transmitted, and we didn't really totally understand it at first either, and so it led to some kind of inconsistent recommendations coming out of the CDC about what type of protective gear and whatnot you needed to wear to be able to prevent the spread. But this is what we refer to, or what we use is what we call droplet precautions. So this is a virus that isn't airborne in the same way that like the measles virus is, or Ebola, which are floating in terms of the virus itself. Out in the airstream, and as such are much more contagious. This is because this requires droplet transmission. So when somebody sneezes or coughs, it is the virus particle is traveling within that moisture droplet, and so what'll happen is it can get caught in the airstream with a droplet, obviously, and aerosolize that way and move through a building. But usually, because it's be carried in a droplet, it has it's responding to gravity, and so it's got a certain size to it. And so when somebody sneezes or coughs, the blast zone, so to speak, is about 6 feet. And so that's the whole point of the social distancing, is that if somebody sneezes or coughs, if you're 6 feet away from them, you're unlikely to get direct exposure from those micro aerosolized droplets that carry the virus. The bigger problem is when somebody sneezes or coughs, and that thin layer then of moisture either lands on a surface, or then somebody coughs into their hand and now touches something and transfers that moisture onto a surface. And then you touch the surface, and now that thin layer of moisture is transferred onto your hands, and you touch your eyes or your mouth or your mucous membranes, and you're transferring it that way. And that's why hand washing and social distancing really are the staples of it, because you're trying to make sure that those droplets are not getting exposed to it. So the questions then become about, types of masks and whatnot. There's this, the questions about N95 respirators, which is really the highest end mask that we use, that really has a very tight mesh essentially inside there that's preventing things that are from going through it. And those are really critical for those aerosolized type viruses, like we're talking about, like with measles and stuff. It's not as important here with a droplet. The droplets, what we've learned with this, once we realized it was not an aerosolized virus, we're not having to require staff in the hospital to be using those N95 masks in the same way that they originally had been. Unless they're involved with a procedure or some sort of a thing that could potentially aerosolize the virus, which means break the droplets open and allow the virus to float free outside of the droplet for a period of time. But so for the average person, a surgical mask, if you've got a family member who's coughing, can help with the spread because it doesn't, it covers their mouth all the time, and so they're not exhaling or breathing that those droplets out. But otherwise, it really is just that good hand hygiene and understanding where the risk factors are in terms of being able to prevent transmission. And then, your comment about bulking up your immune system with zinc or vitamin C or any of those sorts of things. I guess the science is out as far as whether it makes much difference or not. But I know lots of people swear by it, and if it doesn't hurt you, probably is
the
not a bad
placebo
thing
is
to
always
do.
good.
Yeah, exactly.
Yeah. Well, John, so if the N95 masks are not the most, in the most acute sense, the thing that the healthcare workers need, what would you identify? I guess the Congress today gave, as part of this $2.2 trillion measure.
Sorry, I can't help but laugh at the amount of
Try
money.
not to choke on that number.
Yeah, well, I don't know what your perspective here, Chris, of whether or not that's going to do anything with
That's
the
hold on.
economy.
That's the second part of the podcast. You're welcome to stay for it.
Oh, okay.
Yeah, you're welcome to join in, John.
We'll transition to that part in 5 minutes.
All right, just have to stay tuned and listen to the updates. Got it.
Yeah, 150 billion is pledged to hospitals, and of course, the form remains to be seen. But what would you like to see that allocated toward? What do you think the most acute areas of need are?
I think it's great. So I think what we refer to as PPE or personal protective equipment. So this is gowns, masks, face shields, and the masks themselves are more of the conventional surgical masks. What we're using now, we still use the N95s for certain, like I said, procedural things, which are the kind of the higher end masks, but the N95s are actually really pretty uncomfortable to wear. They're kind of hard to breathe through, and it's much more comfortable for all of us to be wearing a more standard surgical type mask that's there. But the supplies of those are challenging because most of those historically have been manufactured in China, and so the supply chain has gotten disrupted in all of this, and the combination of that, certainly has made it such that there is a supply need for those. We've got domestic manufacturing ramping up to be able to meet those needs, but I think that's definitely an area where some of that congressional funding needs to be deployed. The other big one is ventilators, and the need for patients when they truly get sick to be on fairly sophisticated ventilatory support is going to be important. And we really, depending on the projections of the models that you look at, we're going to be way behind the curve on the supply of ventilators because it's.
So should we stock up on those along with the toilet paper Chris and I have been trying to, take over in the West Coast?
You mean go to the hospital and bring your own ventilator? Is that what you're suggesting?
Oddly, a mentor of mine suggested that he'd been reading more than 4 articles about how people are buying and stocking ventilators for their family because they're afraid that they won't be able to get them at the hospital.
I have not seen those stories. It wouldn't surprise me. I wouldn't necessarily recommend it necessarily if you don't necessarily know what you're buying, and
Yeah.
whether it's any good or it's going to be the type that will actually provide you the level of care you need. But overall, ventilator supply, I think, is going to be a critical piece. I think that's in terms of the one piece of medical equipment that needs to be there. And then the other piece is funding the drug trials that we need. There are a couple of potentially promising antiviral agents that are coming out, and obviously the vaccine work is what will prevent future outbreaks. It won't help the immediate process, but I think that's where a chunk of the funding as well needs to go. And then, frankly, the other piece, in terms of hospital funding, is being able to just maintain the infrastructure, the economics for all of us, because basically the hospitals have cut and canceled all of their elective surgery, which is basically our primary revenue stream. So we are now in a situation where almost all of our normal revenue has gone to zero, and our expenses are going through the roof. So we've gone through more masks, our surgical masks here in the last month as a system than we did in the entire year last year. So
is this a death of 1,000 cuts for some
crazy.
small systems or some rural hospitals in your mind?
Yeah, I'm actually significantly worried about the ability of some hospitals to survive this. If you didn't have a strong balance sheet going in, which many didn't, and hospitals are typically running on a 2 or 3% margin in a good year. This is not a from an economic perspective, this is potentially going to put big chunks of the healthcare system out of business. The interesting thing, though, is it's also going to change, I think, potentially patient behavior. So we have overnight almost flipped our health system in terms of access to and utilization of digital and virtual platforms. So, for example, we've had a virtual express care, urgent care kind of a product in the market for a number of years now, and we were doing here about anywhere from 30 to 60 visits a day on that virtual express care platform. That spiked to 1,500 visits a day.
Called? Just in case anyone wants
here.
to Google it, and we can edit the show notes.
Providence Virtual Express Care. And so the 600-fold increase effectively that we've had in the utilization of that platform is if people start getting used to using it and then recognize that they don't need to go to the doctor all the time for things, that is certainly going to change consumer behavior. The other big one is that we have most of our primary care clinics and our routine specialty care clinics are all closed right now because of the virus. We're not wanting to bring kind of routine checkups in, and so as a system, last week we deployed 7,000 accounts for our physicians across the system with Zoom as the telehealth platform to be able to start utilizing it for routine primary care type visits with that. And so if that trend sticks, it's fundamentally going to accelerate for us the utilization of telehealth and digital as a platform that we've had the technology for a while now. It just has not had the market penetrance, and this event may be the catalyst that truly transforms the way healthcare is delivered in the United States.
Mm-hmm.
John, and I don't mean to take so much more of your time, though you're welcome to join us for the economic port and quiz Chris as well. One of my favorite things to do on this podcast to show that we're all bad at it now is predictions. Chris knows exactly where this is going.
This is the test portion of the conversation, what you're saying.
It's the part where Neal asks for numbers to come out of the hat.
Well, this will be interesting. I'll ask you too, Chris. We'll just take do you think we're going to see another pandemic in our lives of this scale? Chris, it's just a yes or a
no. You're younger than I, maybe. A pandemic of this scale, I would say no. Humans will certainly see many
John,
more.
do you think we're going to see a pandemic of this scale in our lives again? I'm younger, yes, than you are.
I hope not is the short answer, but I'm worried that we will.
Yeah, I actually think we will. I'm going to say I'll take myself out of the equation. Chris is the elder statesman here. We're going to see one again in Chris's life.
Probably. Yeah. I don't know about this scale though. This virulence is pretty.
Tanner,
remarkable.
You're on with us, and you're the youngest, and helping us out with this podcast. You can feel free to chime in. Do you think we'll see a podcast? Do you think you'll see a podcast in your life? Do you think we'll see another pandemic in your life?
There's no difference now. Pandemic and podcast.
Yeah, podcasts have definitely gone viral.
I think we should switch over. John, we really appreciate that. I hope you'll.
John, thank you for your time today, and
if you've got the time, we'd love to keep you, and we can really quiz Chris and put him on the lie detector test.
Well, I appreciate the invitation. I need to drop away to another obligation, but this has been fun. Always good to talk to you both.
Yeah, thank you, John, again for your time, and again, best of luck.
John,
on those
please stay
lines.
safe.
Thank you.
Yeah.
All right, sounds good.
Bye-bye.
Have a good one, gentlemen.
Thank you.
Before we get to the circus that is Congress passing these bills, which I guess are good too, but I'm just kind of curious generally what observations you're seeing, or what things are changing for you in terms of clients and all that kind of stuff.
Well, I think first for us all, the speed at which this has unfolded is astonishing. It's pretty remarkable. That's reflected in our psyches, but certainly the big Rorschach of the financial markets that expressed panic and fear and even pause is reflected in those stock market averages. Many people, I think, are sort of frozen by the speed at which this has unfolded. And I'd also say the political response has been rapid as well. And the Fed's response has been pretty remarkably swift. So I'm really never a fan of bailouts, but will say that I think the Fed's role as a lender of last resort, the kind of original raison d'etre, the reason for being of all central banks, from the Riksbank, the oldest in Sweden, to the Bank of England, to our Fed, is really to ease the credit crunch when we have a mismatch between assets and liabilities, and in the short term when we have a liquidity problem. And they've done that remarkably. It's been going on for a while pre-COVID-19, of course, in the repo market, but it's accelerated greatly. And the commercial mortgage-backed funding facilities and the facilities for the money market funds, et cetera, seem to have, at least in some ways, quelled the markets and brought some liquidity back, which is good. Lest it could have been worse. So I think just to me, the speed of all this is pretty remarkable. And, we've thought about this for years, Neal. We've even talked about just the rise of electronic trading, which most days is about 86% of all trading done by computers, algorithms, indexing, et cetera, and how rapidly that could unwind as well. So I think, that's to me the most remarkable thing. I don't think it's over, though, the market swoon. Each of the previous declines have led to over a 50%
They didn't. Yes,
change.
but they didn't inject large percentages of the entire GDP in lots of different ways.
Yeah, 10% of our GDP today was in this spending
Is it that
bill,
high
right?
now? So do you think we're going to get to 10% of our total GDP in bailouts?
Well, a $2.2 trillion fund, this bailout.
I guess it's 20.
I mean, it's a mixed bag.
What the GDP is what, 24 billion?
Yeah.
24 trillion?
Yeah, 24 trillion. Yeah.
Sorry.
Right. Is a trillion a lot anymore?
Well, and then the $1.5 billion that went in before that was swallowed up in 90 minutes. Or sorry, the $1.5 trillion. I'm not used to using that number.
Yeah, exactly. So we're up there. It's like throwing it into a chasm.
And it doesn't sound like we're done, right? Because that was the Republicans' bill that passed. Now we're going to see the Democrats' bill that passes. And it seems like we're going to throw more in the chasm. If we can get to 15% of the total GDP, do you really still bet against the economy having the same jitters? And has there been an experiment like this in history before, by the way? Like, you're a pretty good historian.
Probably not. Nothing is, of course, an exact parallel. There have been, of course, many attempts at printing money to stave off financial ruin. But we're fairly over indebted. Generally, the households are probably in the best shape they've been in a couple of decades in terms of debt to disposable personal income. But it doesn't mean it doesn't augur well for GDP, which is best thought of as total sales, in the economy. So, and we've got these big gaps and so many unknowns. Neal, will this this coronavirus pandemic mirror the flu virus of 100 years ago and have successive waves, maybe with the second wave being more virulent? So will the economy need to shut down again in September if we are able to revive it in the warm weather? Will the cool weather again? August, September, October of 1918 was the largest death toll in the U.S. from the Spanish flu. Again, we just heard from John that they're not exactly the same, different families, but still, if we let our guard down and cease social distancing and some of the new norms as the weather cools again and we get on the other side of summer, will we have a recurrence? Will that create more economic dislocation? Almost certainly there'll be infections that last throughout, but what that pattern looks like, we don't know. And then what the effect of on the economy will be, we don't know. I just find it very interesting. This is the first crisis we've had in a very long time that didn't start in the financial plumbing. And so,
but we have been having a problem with financial plumbing for a while. So, at the same time.
Right. But when you have a problem in the financial plumbing, you can use plumbing tools to fix it. Here, we're really fighting an enemy. I mean, it's been likened to war, and the requisitions of the government, the bills that are passed are like wartime bills. This kind of spending is extraordinary. I don't know. Will it choke off the regular economy too if it's sort of wartime spending? I don't know what the right the proper corollary is, but the highest government indebtedness we had was the government of Britain after the Napoleonic Wars. So there, the debt was something like 440%, 480% of GDP.
And what is ours today?
Our debt load today. It's about 110%.
So we can go another 300%, Chris. We've got a bigger credit card. What's the problem?
Most of the research has shown that any debt to GDP numbers that are greater than 100% severely hamper or even cripple the economy. Most economies can't handle it and ultimately default. A few are very efficient, like Japan, the U.S., many economies in Europe. They're efficient at tax collection. Not like Greece or Italy necessarily. And so they can, yeah, or India, right? So those countries that have general compliance and a good tax collection policy have been able to withstand higher debt to GDP levels, but effectively still, you're crowding out private borrowing. I mean, there's this argument now because we've gotten so used to the Fed expanding their balance sheet, basically money printing, that we think it's a money tree that can last forever. And this is a delusion that's, again, plagued mankind since time immemorial, from the Romans to, the French and the assignat inflation to all the different bubbles, from the South Sea bubble, et cetera, to the Mississippi scheme. When the government slash central banks expand their balance sheets printing money, ultimately there is a day of reckoning. The credit markets are usually the ones that implode. And though this is an external event, that's what we really have to watch
so talk
for.
to me about inflation, depressionary, kind of attributes to America. Do you believe there's a probability? How's that? Not a, we'll say a greater than 10% chance that we could all end up homeless as a result of the pandemic. There's a tough question for you.
No, I don't think that. I think we're showing signs of inflating this away. I guess.
Yeah, it means tough questions, right? Sorry.
Yeah, these are no. It's okay. There are so many possibilities in so many ways. It's generally presumed that the British government, following the Napoleonic Wars, did not default. They too reduced the value of the currency. They created inflation, basically. They inflated the debt away, and they managed to do it because there was still growth in the empire, and the revenues were growing. I don't know that that's the case in the U.S. today, that there's quite a corollary. I know we're going to try to inflate
Talk to me about what that
away.
means, right? You and I have talked before. Pretty interesting. Before I took economics in college and in high school, and that started to wake me up. And then I met you, and that started to really wake me up to really understanding a little more of the economy and the things I saw and how they were interacting and reacting. And I remember us talking about this really interesting point when my parents moved to this country in '76 before I was born. That was probably the peak spending power Americans had, somewhere inside that late '70s spot. And you're saying we were kind of starting to get back there again. And then obviously I saw and experienced, the '80s and '90s, thinking that wasn't quite as good in terms of like their spending power. What's our spending power going to be like over the next 5 or 10? Do you think this inflation's really going to hurt it in ways we can't predict? And I'm just trying to get a feel for it, right? I have no idea even how to ask all of the questions that I think your clients must be asking, that my LPs will be asking, that your wife is wondering as a school teacher.
Yeah, I would think there are several ways to answer that question. But the first thing is, when you create currency without any new assets being created, you're not expanding the pool of assets. You're just expanding the claim tickets on those assets. Each claim ticket is diluted. It's worth less. You haven't enlarged the asset pool. You've just created more confetti, right? those little certificates that lay claim or are measures of. So you're basically diluting the value of money. It's often said inflation is rising prices, or reflected in rising prices, but that's really falling money, right? So to inflate away the debt, you can continue to create these claims, these currencies, these dollar bills, electronically or in paper or whatever form, and you're paying for debt you've incurred today with cheaper and cheaper certificates, these paper dollars in the future, or electronic dollars. So you're paying tomorrow with cheaper currency. That's why most in the banking system, of course, insist on a positive carry, that you have an interest rate, a cost of money you charge to borrowers that has an inflation rider built in or accommodates for some expected inflation. So if you think inflation will average 3% a year, then you should be lending at
Yeah.
inflation plus 2% seems to have been a
So
historical
do
norm,
you
right?
think,
So
Santiago's Frappuccino, Santiago is Chris's son. Is his Frappuccino going to go up by 5% or 20% over the next 2 years?
yeah, in the there's a larger question too. You can see it in currencies around the world that are not the dollar. The dollar has a very enviable position of being the reserve currency, like the British pound was 100 years ago. And that means that it is part of every financial institution's reserves. And so it's collected and held, and sometimes even used in transactions in places far away from here, Latin America. And, people
Zimbabwe.
will take dollars over their local currency. Zimbabwe. Yeah, right. So, the Russian ruble just tanked. It went from roughly 35 to 65. So you see these wild swings in currencies against the dollar in this crisis too, and certainly with the oil markets changing for Russia, that had a big effect on the currency. But those kinds of swings in the value of the dollar are probably not going to happen, but more of a gradual, maybe with some episodic shifts, decline in its purchasing power. And yes, I think the Frappuccino is going to be in dollar terms
Many
many
multiples.
multiples of what it is today. Yeah, at the historical 3% plus 70 years or so, we have data. The last data point I have is the end of 2018. So, but roughly 3.3% CPI inflation, which translates to a doubling in prices every 21 years or so, 20 years. So you would expect that prices would double and then
In the
double
next
again.
but I was thinking about the next 2 years.
Very easily. Oh, the next 2 years. Oh no, I don't know. I think depends on what you're trying
I'm still talking about
to
Santiago's
purchase.
Frappuccino at Starbucks.
Yeah. Well, the inflation appears in many ways. He'll have probably a smaller cup, maybe with more substituted
That's probably
ingredients.
better for all of us anyway.
Less chocolate. Yeah, maybe. Yeah, and the same price point, or it'll be more expensive. Yeah, I think there's a shift happening. I think there's been tremendous inflation in certain asset prices, but it hasn't spilled over yet into consumer prices fully. And that we'll probably begin to see some sort of inflation in commodities and agricultural commodities as well as hard commodities. That's usually kind of a big regime shift. And with the actions that the central banks are taking, the massive stimulus and money printing environment we're in, that will weaken the dollar. But how quickly companies abandon the dollar as the reserve currency, because I don't know what alternatives we really yet have, requires a little more imagination about the future. But still, right now, it's still the reserve currency and probably will stay so for the next 2 years. So the demand for the dollars, there's a sort of floor in the demand, at least as it would appear.
I'm going to share some of the data I gained from PitchBook and a webinar they did. PitchBook is owned by Morningstar, and they are probably the lead data gatherer on startup companies in the world, if not number two. They're very, very large, obviously. And I just want you to, because I love predictions, I just want you to tell me whether you kind of agree or disagree. That's all. This is easy. Agree or disagree. Nothing more. No ad lib extra. They kind of said that they expected angel and seed rounds to be maintained, and they expected people to continue to invest in angel and seed rounds. Do you agree or disagree? That's all we're playing. I disagree. I think it's going to fall a little bit.
I disagree. Liquidity issues are going to keep recurring because of the credit markets problems. Yes. So I agree with you, Neal, and disagree.
Valuations at early stage are likely to fall. However, early stage valuations tend to oscillate within a range. I agree with that. I don't think we'll see.
I agree as well.
The example we've used lots of times is Juno Diagnostics. I don't think we'd see a company as healthy as that really fall out of its valuation so largely in its first round. During the current crisis, later stage deals will likely be hit the hardest. I totally agree with that. Because those are already real businesses. So
Yes.
Now they have to start to follow norms.
Right. It's the rubber hits the road now.
No more VC exuberance.
Right.
Over-leveraged corporations will dramatically lower revenue prospects, creating weakness in corporate M&A in general. I agree with that. Yeah, that's huge.
Yes.
So,
I agree.
So tell me, the portfolio we have together today, you've got a piece of it. Are you more worried 5 years from now that these companies won't be able to exit?
I think that they're no, because I'm not sure. I know what the exit will look like, right? I think there's still many different possible outcomes. If you asked me, though, if I think they'd exit in the form of an initial public offering in the stock market, I would say yes. The possibility is lower 5 years from now than it is today, if that's the liquidity event. If it is, buyout from a larger PE fund or a private enterprise, private company.
I think that's where 90% of the transactions are anyway. And I'm not always necessarily concerned about smaller when you can't do something about it. I am worried about, obviously, valuations, but
I think that's true, that the valuations will probably not be as
But even some of the
generous
companies
as
we're
they are
looking at,
today,
if they
for
were
sure.
cut by 30% on the exit, 30%, we'd be really happy with the gains, I believe. They've got a few more statements here.
Is there a precedent for that, Neal? When you looked at 2008 and 9, when things were really in the deep freeze then, were there any deals by which you could sort of gauge?
It's a really good question. I wasn't investing then. I was the entrepreneur then, so I wasn't paying as much attention. But I will answer this question for you on our next podcast.
That will be great. I'll wait with great anticipation.
I'm sure there's very good data for this, right? But I'm betting it's almost the exact same reactions for at least a couple of years, right? Before exuberance starts to... the human mind is fickle. It's pretty easy to forget. And we get overly exuberant about things in general as a population. So I bet that it's going to mirror something similar beforehand. We're likely to see continued moves towards specialist VCs and PEs and large multi-strategy players. Yeah, I've thought that for a long time. I agree with that statement.
Yeah, I agree
More
as well.
established secondary market offers to unlock illiquid deals. And I've thought that for a very long while as well, that's going to happen.
Yes, yeah, I agree.
Oh, the highest end of the market will be crunched. Yes, I always expect the Ubers of the world to be crunched. And when they're not, I'm...
That's fait accompli. That's a foregone conclusion after WeWork. That whole business model is dead now, Neal. We talked about coronavirus and the uneven effects of it, economically speaking. Obviously travel, tourism, leisure, being disproportionately affected. But I think the stay-at-home has killed the remote
Well,
work.
it's interesting. I used to get
collective
lots of
office.
questions as a fund about being decentralized. I bet those questions are over. Right? Because I always wanted just the best people who were intrinsically motivated. It didn't matter to me whether Eric Ten's in Orange County or Vancouver or San Antonio. I just wanted Eric Ten.
Correct.
So
Right.
no longer will people look at me strangely for that. Are there any other closing messages or anything else you want to share specifically? Let's actually just change it to your specific 120 families that you care deeply about and are your clients and people you think about daily, literally.
Yeah, I think it's very fascinating in my business too, and on the retail side, we hear a lot from our clients, and so it's almost like having a 120, 240 points of radar out there, right? We can feel their fear and their panic as well as their trust, and I think when clients really want to be in the stock market aggressively, it's a warning sign because they're contrary indicators. I think when people are very, very, very fearful, like last week, it was very palpable that there's probably a rally coming, like a relief. Again, another contrary indicator. But I would say generally, people have been a little cavalier in some ways
Wait,
about
this
the
is what you want to say
financial
to your
markets.
clients to end the podcast episode?
No, I would just like to say I think it's still important for people to consider and be cautious. There are a lot of investment landmines. We've seen the market sell off very, very rapidly, and we've seen it recover. And again, it's uneven how this break in the economic engine will affect different businesses. There are many who will survive, of course. We'll all come out of the other end of this. But when we look back, I think we'll have to think about those companies today that make the most sense, which have the strongest balance sheets, of course, which can even weather this storm pretty in one piece, because it'll come in waves. I guess what I'm saying too is we shouldn't be too premature. I think there are going to be more bargains forthcoming. The opportunity set's changing so rapidly that we should just be on our guard and keep our hope up, but also expect better and better things to come.
It sounds like then you are also even more confident of your portfolio at this moment.
Wow, that's a tough one.
This moment
I
only.
think,
Yeah, I know it can change
yes.
tomorrow.
No, well, right. But I'd say too, I'm trying, when I think about the portfolio, I think mostly of the long view, because today's investments won't really flower, I believe, for 12 to 18 months in the minimum, if we're very, very lucky. And then beyond that, I think we have a great chance of having made very successful bets.
Yeah, you told me like 2 years you
investments
expect
time.
to start to see is how you're looking at some of the portfolio, right?
Yeah. I mean, we're bullish on the energy sector, but what's that mean right now when no one's driving and airlines are grounded and the demand has been destroyed? It's estimated, we'll see a 4 million barrel per day decline in consumption on oil in the U.S. That's a big drop in demand, but I think it'll bounce back by the end of the year and probably in the first quarter of next year. Will that resuscitate companies that are now on the ropes? I don't know, but if they have the balance sheet to survive it, yes. And then beyond that, I think too, a price war will be over. We'll see things sort of start to normalize, and that's really the environment for which I'm investing today.
Chris, is there any way, and we don't do too many commercials because we're both kind of against it. What's the best way for somebody to reach you who wants to actually consider going through your gauntlet of trials to potentially become a client?
They can visit the website at hbawealth.com, H hotel, Bravo, Alpha, wealth, like money or health, really, the basis of that word, .com. I can be reached by email as well at chris@hbawealth.com. Both ways are great to connect, and directly from the website, of course, you can reach out to contact
Yeah, I actually want to tell you it's a
information.
gauntlet. Chris doesn't want you as his client unless you want to think long term, just like he does about his portfolio. Is that okay that I add that in there? Or do you want me to edit that out?
Well, it makes the most sense for our thinking and interest to be aligned, but it requires that I'm, of course, here to educate and help clients along in their thinking about investing. We're really honored to help people with their savings, and savings is foregone consumption. That should do something for you. Otherwise, you should just consume it. If you're giving something up for it, it's really a kind of sacred charge and trust. So we want to manage that very carefully to protect and grow it. And again, everything has its season, and it just takes time for ideas to flower. Sometimes they flower quickly, but generally speaking, nature has its own schedule. The investment cycle and the business cycle run on their own schedule, tied to the human cycle, but nothing we can control. So.
Thanks, everybody, for joining us today.